stocks that Goldman Sachs is recommending their clients to buy. That is what I'm going to share with you guys here today. The 5 stocks, what these companies do. 3 of these companies, or at least 2 to 3 of these companies, are very popular companies that actually some of you guys may actually own right now or have thought about buying. Very popular stocks. 2 of them are much more under the radar type companies. All these companies are highly profitable. All of them make a lot of money. And so this is coming out of their chief investment strategist is basically the one that is suggesting these 5 stocks, all right? So Goldman Sachs is worried about rising commodity prices and higher wages, but the firm believes there's still an investment strategy that can outperform. The firm recommends companies with high profit margins and return on assets. That's because despite the one-time boost to profit from the corporate tax cuts, companies face a number of challenges to maintain their profit margins, he's saying, okay? So let's just get into this, guys. These are those 5 stocks. I hope you guys enjoy this. The first one is a company named AbbVie, ticker symbol ABBV. This one year to date hasn't done anything. It's gone down 0.7%. So this stock has not done anything as of yet. This company, AbbVie, discovers, develops, manufactures, and sells pharmaceutical products worldwide. It's a pharmaceutical company. If you want to read more in depth on it, pause the video right here and you can kind of read more in depth on it. If you look at their income statement, the revenue growth has been stellar, okay? Stellar, just year after year knocking out of the ballpark. So $19.9 billion they do in 2014. 2015 they do $22.8 billion in 2015. 2016 they do $25.6 billion. This past year they do 28.2. Okay, so just consistent. That's the type of revenue growth you want to see out of a company. Consistent and going up, you know, at least a few billion a year. That is phenomenal there. Okay, phenomenal. Now on the net income side, I'm not nearly as impressed. So they did under 2 billion back in 14, but then 15 they do over 5 billion. 16 they do almost 6 billion. This past year they dropped down to 5.3 billion. So was a little hit this past year. Maybe they can get that back going again. This company right now trades at a forward P under 11, all right? Under 11 and trailing P of 24, market cap of 145 billion. So needless to say, they're expected to be a lot more profitable this year than they have been in the past. A healthcare related company. Healthcare is not a sector I usually personally touch very much, just because a lot of these companies have limited growth, at least from what I've seen, you know, in the 10 years I've been in the stock market. A lot of these companies have limited growth, and a lot of them are some of their business models are hard to understand, and like, why does this one have an advantage over this one and whatnot? Not a sector I'm that interested in, but needless to say, it looks like it could be a pretty good stock, guys. Let's get into stock number 2. You're gonna know this one very well, and the company's name is Facebook. Facebook, year to date, they're up close to 18%, which is amazing when you take into context just the fact that Facebook went through the whole Cambridge Analytica situation this year. Mark Zuckerberg went to Congress and you know, or Capitol Hill. And had to talk about the whole situation. Like, you know, there's been a lot of drama with Facebook in this year. So to be up nearly 18% in a market that's been pretty weak this year, that's very, very, very impressive, all right? Facebook, do I really need to explain this company? They own some of the biggest platforms in the world. Facebook, Instagram, WhatsApp, Oculus, just a ton of different things. If you want to read more about the company, you can pause it right there. Income statement, arguably the most impressive income statement of any public company I've ever seen, honestly. This is arguably the best income statement I've ever seen of any company in terms of the rate that their numbers are going up, okay? Revenue, 12 billion in 2014, then almost 18 billion in 2015, 27 plus billion in 2016. This past year, over $40 billion in revenue. That is unbelievably impressive. Then you look at the net income and you can see how much money is going down to that bottom line. It's amazing, okay? Under 3 billion in 14. Then 15, they do 3.6. Then 2016, they do over $10 billion in net income, guys. And then this past year, they do nearly $16 billion in net income. It is off the charts, off the charts. That income statement is beyond impressive. So consistent, such phenomenal growth in the revenue and the net income. In I mean, nearly, you know, somewhere around close to 40% of the money that's coming through the door in revenue is actually going down to net income. That's one of the highest ratios I've seen out there from a big company, guys. Unbelievable. Facebook right now has a market cap of around $600 billion. They have a trailing PE on this company of 34, forward PE of 23. 22, which forward P of 22 is actually relatively low for this stock when you think about it. They still have a lot of growth ahead of them in terms of their profit growth and revenue growth as ad rates go up and more advertisers get on their platforms. In terms of monthly active users, daily active users using their products, in my personal opinion, they don't have much growth left in those type of things, okay, as far as big percentages. However, when you're taking just into account like how many more advertisers are going to be advertising on Instagram, Facebook, WhatsApp, all these different things, and how those ad rates are going to push up, they should be able to increase profits dramatically over the next 5 to 10 years, guys. So that one came in at number 2. Number 3 has been one of the hottest stocks. This stock's up somewhere around 1,600% in the past 3 years, or not past 3 years, past 5 years, around 1,100% in the past 3 years. Nvidia Corporation up another 28+% just this year alone, guys. Just this year alone. Nvidia operates 2 business segments, GPU and their processor business. They, you know, if you want to pause that, you can read more in depth about it there. Their business model is unbelievable in terms of all the things that you're doing. They're not just doing things like high-end gaming, but they're involved with, you know, if you want to mine for cryptos and whatnot, you're going to probably use Nvidia products. Artificial intelligence. This company's out in front of everybody in the artificial intelligence game. When you think about it from the perspective of self-driving cars, it's just, they are doing so many big things in this world that is going to help, you know, rapidly accelerate so many different industries, and they're one of the biggest disruptors in all of the world right now in terms of the, you know, what that company is going to disrupt in the future. Amazing business, and you can see it's an amazing business by looking at this income statement. Okay, so $4.5 billion due in 2015 for revenue. 2016 they do $5 billion, then nearly $7 billion. This past year they do $9.7 billion, almost $10 billion in revenue there, and then you see the net income is just going up at a substantial rate. 631 million, then they do 614 million. It looks like, oh, maybe this business isn't growing much. Then all of a sudden they do $1.6 billion. This past year they do over $3 billion in net income, all right? A very fast growing company. Market cap on this one of around $151 billion, so this has become a really big corporation now. Trailing P of 41, rich. Forward P of 31, which is also rich, but at the same time, when you take into account the fact that this company should be able to grow for years and years to come because they're in the forefront of all these major industries that are going to blow up over the next few years. When you take that into account, you kind of got to understand you got to pay up for a company like this. And when you have a management team like Nvidia has, where they are executing on all cylinders, they deserve a higher premium than what the market's trading at. It's just the bottom line. The growth going forward, how great that management team is, like they just kind of deserve it in the end, all right? Next one up here is another healthcare name. This company is called Biogen. Okay, Biogen. This company is up around 10% year to date. Okay, Biogen discovers, develops, manufactures, and delivers therapies for the treatment of neurological and neurodegenerative diseases worldwide. Wow, I'm so proud of myself for now being able to say that name. Neurodegenerative diseases worldwide. If you want to read more about the company, go ahead and pause the video here. You can kind of read up more up on it. Another company that has great income statement, especially in terms of revenue. $9.7 billion in 2014. 2015 they do $10.7 billion. $11.4 billion in 2016. 2017, this past year, they do over $12 billion in revenue. Consistent growth. The net income I'm not nearly as impressed on because it's kind of all over the place. So $2.9 billion, then they do $3.5 billion in net income, then $3.7 billion. This past year they dropped down to $2.5 billion. So net income's kind of all over the place for this company. Maybe they're expected to get it back going here. Company has a market cap of $74 billion, so pretty big company. Trailing P of 25, but a forward P of 13 in this company, which is very low. So maybe an interesting healthcare name. If you guys know anything about Biogen, I would love to hear from you guys in that comment section, kind of, talk about Biogen a bit. And the last one, number 5, is a company named Micron, ticker symbol MU. Very popular stock. So this one, year to date, is up close to 37%. The best part about that is most MU shareholders feel like it should be up way more than that right now. Just to have a 7% gain, a lot of MU shareholders are like, dude, this stock should be up 50, 60, 70% right now based upon the type of results this company has put out. So Micron, in the simplest way to describing this company, it's a memory chip company, all right? Networking, storage business, mobile business, embedded business, anything that's using, think about anything that's using computing power, it needs memory in it, okay? If you want to pause the video there to look more into it, you can look more into it, but it's a memory chip company at the end of the day. Revenue has been inconsistent for this company in the past few years. So they do 16 billion in 2014, 2015 comes along, they do another 16 billion. 2016, major troubles with the company just because of the industry is basically was going through a hard time, and they only do $12 billion in revenue. This past year, over $20 billion in revenue, all right? And on the net income side, they do $3 billion in profit. Back in 15, they do 2.8 billion. 2016, they actually lose money, nearly 300 million. Then all of a sudden, they make over a $5 billion profit this past year. And this upcoming year, listen to this year we're in right now, they're expected to maybe make somewhere around $10 billion, maybe even more than $10 billion in net income, guys. I was thinking about that. A couple of years ago, as a company that loses 300 million, now they're expecting to make a profit of over 10 billion this year. Unbelievable. This company has a market cap of 65 billion on it, trailing P of 5.6, and a forward P of 4.8. Yes, I read that right. You are not mistaken there. A 4.8. 4.8 forward P on this company, unbelievably low. Okay, so let's go ahead and look at this for a second. So Goldman's highest net margins and return on assets basket. If we look at these 5 stocks, here's kind of like what the Goldman Sachs is expecting these stocks to go up. The healthcare name, that first one we talked about, AbbVie, they're expecting around a 41% upside potential there. Biogen, they're expecting around 12% upside. Facebook, they're expecting around a 9% upside, so that would be the least good performer out of the bunch. And they're still expecting around 23% upside. And then Nvidia, they're still expecting around 23% upside there. One thing I would just caution you guys on is, just because Goldman Sachs, one of the main guys in charge of their equity strategy says, hey, you guys should go out and buy those stocks, it does not mean you should necessarily go buy those stocks. Always do your own research, always do your own work. It's worth looking into some of these companies and kind of seeing if it's something that interests you to invest in, but never just invest in it because someone said it, whether it's me, whether it's Goldman Sachs, doesn't matter who it is, Warren Buffett. Always do your own research out there and try to figure out if that you believe that's a good company to be invested in, guys. So I would love to hear your guys' opinion on any of these stocks down there in the comment section. I would love to hear from you guys as always. Make sure you follow me on Instagram if you have not already. The content I am posting on Instagram is going up to whole new levels, guys. I'm just taking the value proposition for following me on Instagram up to record levels. So make sure you follow me on there if you have not already. Thank you for watching. Have a great day.